Now here's Monica with Today Tonight.
Thanks, Rick. Hello again. First, whether you own or rent, real estate's the one thing that affects us all. So what's in store for the year ahead? We've assembled a team of experts to give us the hot tip on buying, building, renting and renovating and the best suburbs to invest in. Here's Mark Gibson with our Perth Property Guide.
We're certainly seeing recovery in the market. We've had around about 4 years in the doldrums.
Well, from up here in the chopper, you can see how Perth's expanded over these last 20 or 30 years.
They're the real estate industry's big four. REWA President David Airey.
This recovering market really crept up on us. It surprised seasoned real estate people like me.
Property developer Nigel Satterley.
First home buyers know this is a good time to be in the real estate market.
Building guru Dale Alcock.
So very much we're seeing 2013 as a positive year where we're seeing activity come back into the market.
And expert number cruncher Gavin Hegney.
In theory, we should be seeing a change from a buyer's market to a seller's market through 2013.
If anyone knows what's in store for the property market, it's those four. Tonight, their expert advice for buyers, sellers, investors and renters.
The whole market lifted, particularly in the last quarter.
Before we get this year's forecast, let's see what happened in 2012.
A lot of fear last year in the market. People were still very scared about, is the housing market overvalued? Is it going to crash?
Despite that fear, Perth's median house price went from $467,000 at the start of the year to $495,000 by year's end. The average number of selling days came down from 80 to 70, and that's continuing to fall.
That shows that people are pricing their properties very sensibly and buyers are making sensible offers. The two are coming together.
So it's a bit quicker to sell your property, and there's less discounting. It was being discounted by about 8%, now it's being discounted by about 6%. So you can see the market slowly tightening up.
Rent went through the roof, a 17% increase to an average of $450 a week. The main reason, the vacancy rate fell to just 1.8%.
And that's horrendous.
So in the face of record rents, many people bought their first home, which gave the market a much-needed boost.
From a new homes point of view, we've very much seen recovery of first homeowners activity. That's very strong at the moment.
Thank you, first home buyers. 1 in 4 or 1 in 5 of you have been buying everything under $500,000.
So we started to see values slowly lift off the bottom, irrespective of all that fear that was pervading in the market.
Mount Lawley was last year's best performing suburb. The 90 houses that sold were 20% up on the previous year, with the average price hitting $1 million.
Yes, exceptional for an old suburb, but a lot of houses, a lot of areas have come off a low base.
Neighbouring Inglewood grew just under 10% for an average of $790,000. Careen jumped 7.5% to an average $730,000. Karrinyup grew 4.3% to $780,000. And in the south, Hammond Park spiked 13.3% to an average $525,000, while Murdoch was up nearly 11% to $720,000.
Probably crystal ball gazing, but I think really the next couple of years are going to be quite strong because we've had 3 to 4 quiet ones leading into this period.
The consensus is property prices will rise in 2013.
I think we'll see 6 to 10% increase in values in 2013, led by a very tight rental market and a very below average number of properties on the market, particularly in this up to $750,000 category.
I'd be very surprised if 2013 doesn't show at least 5% across the board growth in median values.
For a bird's eye view of Perth property, we took REWA boss David Airey for a spin in the 7 helicopter.
The city has just expanded and completely up and down the coast. There's new subdivisions and new homes just popping up everywhere.
From up here, you can see Perth's love affair with subdividing, spreading from the city to the suburbs.
That's a great idea, but if you're going to double or triple the population in these areas with infill, you need to make sure that road transport and rail transport is easily available to people who are going to live in those areas.
David has identified 4 suburbs where first home buyers can still score a bargain.
We see first home buyers attacking Ellenbrook, Canning Vale, Baldivis and Maylands because there's a lot of cheap properties to pick off in those areas.
In the next price bracket, 600 to 800,000, David says plenty of suburbs are set to grow. In the north,
North Beach, Woodvale and more in the inner city, the Mount Hawthorn areas and North Perth areas are likely to have strong recovery through 2013.
and the south.
Leeming, Lathlane, Baldivis, Canning Vale and Baldivis in particular.
If you're thinking about an investment property, look for the right area.
They're areas that are close to railway stations and transport nodes. They've got established shopping centres, schools and infrastructure.
From the air, David Airey pointed out some hot tips for investors. East Perth, with massive city development on its doorstep. Craigie, not far from the freeway and the coast. Morley, Belmont and Bassendean.
I think by the end of the year people will be feeling a lot more confident than they are today even.
Rising confidence, rising house prices. But what about rent? Well, there's some good news and bad news. We shouldn't see the crazy increases of last year, but rents are still expected to rise.
We've still got a vacancy rate of about 1.8%, so I think we'll still see rental growth in the market, but at a softer rate of between 5 and 10%, not the 15 and 20% that we saw last year.
We don't want to see this massive ballooning of rents, and everybody's blaming everybody else. It purely comes down to supply and demand.
You've got a tight rental market, you've got a tight purchasing market, there is no wriggle room. The only wriggle room is go and buy a block of land and build a new home.
That's music to the ears of land developers like Nigel Satterley.
People are saying, I've nearly had enough of this high rent, don't know how much my rent's going to go up. I can, buy on low deposit, get a Key Start loan or a bank loan and own my own home.
Nigel's fairly cautious about the year ahead.
I'm very confident that we're going to see at least 5% more activity than we saw last year. So, we're going to enter now the soft recovery phase.
He says the signs are already good.
We've seen the last 2 weekends the best traffic since the GFC, huge traffic coming through the show home. So this is a very good sign.
We've started to see people buying blocks of land. We'll see them building in 2013. If there's any advice I could give somebody looking to build would be make your decisions sooner than later, because by late 2013 I think the builders would be very busy.
I don't see any skill shortages affecting building, so this is a good year to be building a new home.
Enter Dale Alcock.
So if people are wondering about when to get on with it, really now's the time, because I think it can only get busier from here.
Apart from building, Dale's in the business of renovating.
If you buy the property and extend it in the right manner, people will make money.
And renos don't get much bigger than this. A 75-year-old Wembley home transformed from this to this.
People are really looking and saying, well, the older suburbs are either a knockdown rebuild opportunity or, in fact, taking a home that's got great character and seeing what they can add and extend to it, both up or out.
The view from the backyard is just as impressive. From a 2-bedroom, 1-bathroom home to a 4-bedroom, 2-bathroom masterpiece with a huge extension out the back. Here's the before and the after. So this is where the old house used to end, right?
Yes, just at this point here, sort of 4 rooms at the front and then a bit of a lean-to veranda at the back.
It was already valued at $920,000. After the renovation, which is worth $400,000, the house is expected to fetch up to $2 million. But before that, it'll be open to the public as Perth's first renovation display home.
So people could come in and see the bones of the existing home, the character that we've retained, but also then we would be able to describe to the public how we've changed the function of various rooms.
He's known for building new homes, but Dale says renovating has its benefits.
Probably 85–90% of the home improvements we do, people are living within the home whilst we're extending. So that sort of overcomes the rent while you're building aspect of it.
So after a few good years for buyers, our experts say prices should rise in 2013.
You might say from the bottom up, the lower the priced home, the more likely the greater recovery and growth that we'll see.
We're seeing a crossover between the rising rents and house repayments with interest rates coming down. Of course, first home buyers know this is a good time to be in the real estate market purchasing or building.
And with first home buyers already leading the charge, the trade-up market should be the next to go.
So that's the sort of $750 to $1 million. That's where the best value is. That's where we'll see probably the best opportunities in 2013.
A little slower in the upper end of the market, but that's slowly recovering, and we're getting recovery in the home improvement sector. So very much we're seeing 2013 as a positive year.
In a year's time, the average person will feel their home has increased by $20,000 or $30,000 or $40,000. And we look at your own home having increased in value, confidence levels rise.
So 13 will be a better year.
Mark Gibson there.